It's a brand new week on Business Morning. Welcome and thank you for joining us. I'm Chimeze Obi Iwagu. Well, this week looks pretty heavy on the calendar for business. But for today, just the Nigeria-China Economic and Business Forum is scheduled to hold, and that's in Abuja. On Tuesday, February the 18th, is the day the National Bureau of Statistics will be releasing the CPI and inflation report for January 2020. The data was actually supposed to be published today, but for some reasons, the date was changed to tomorrow. NBS will also publish the premium motor spirit, that's petrol price, for January 2020. That would be on Tuesday. The Lagos State Chamber of Commerce and Industry, in collaboration with CIPE, will hold the Stakeholders Forum on the impact of border closure on Nigeria economy, while the West Africa Agribusiness Show will hold on the same day, also in Lagos. Wednesday looks a bit heavier on the calendar. The National Bureau of Statistics will, on this day, release the automotive gas oil, that is diesel price watch January 2020, and National Household Kerosene Price Watch January 2020. Also, the LBS inaugural lecture of Professor Olayinka David West will hold on the same day with the title, "If I Build It, Will They Come?" Also, the Central Securities Clearing System is holding its 2020 outlook today, or rather that's Wednesday in Lagos. In the meantime, coronation breakfast session, an interactive session with the theme Re-Risking the Financial System, is scheduled to also hold on that day with a panel discussion to analyze the impact of foreign direct investments on Nigeria's economic growth and overcoming the dependence of foreign portfolio investments. Economic Associates will also host a one-day conference on Nigeria's economic outlook. This will take place here in Lagos. All of these will be happening in Lagos. Now, on Thursday, February the 20th, while the Nigerian British Chamber of Commerce is billed to hold the public-private partnerships, how to make it work in Nigeria, the Nigerian American Chambers of Commerce will hold its February 2020 breakfast meeting with the theme Tax and Revenue Generation, the Lagos State Approach. On the data front, the National Bureau of Statistics will, on the same day, release the liquefied petroleum gas, that's cooking gas price, was January 2020, selected food prices January 2020, and transport fare watch January 2020. And nothing much is on the calendar for Friday. The Net Unite 2020 will hold on this day with a theme Enabling the Digital Economy, while the National Bureau of Statistics will, on the same day, release the Federation Account Allocation Committee January 2019 disbursement. All right, that's pretty much what the week looks like. And let's turn our searchlight now to the market. BC Adebayo is on board. Well, BC, good morning.
Good morning.
Bearish sentiment dominated the market last week. No thanks to Nestle, MTN, Nigeria, and so on. That's the sell-off there.
Yes, indeed, Chimeze. Now, we saw weak sentiments continuing to dominate activities at the equities market.
Third
consecutive week, exactly. And this sent the all-share index tumbling by 1.11% week on week. It finished at 27,755.87. This, of course, brought the year-to-date returns to plus 3.4% and month-to-date at minus 2.7%. On the activity chart, though, we saw a total turnover of 912.17 million shares, and that was worth 12.12 billion naira in 17,083 deals. That was what was exchanged by investors on the floor of the exchange last week. Analyzing by sectors now, we saw significant losses recorded in the consumer goods, insurance sectors, and of course, this weighed heavily on market performance. The oil and gas and banking indices also followed suit, and the industrial goods index was the sole gainer for the week. But looking at the numbers now, the banking sector index was down 0.21%. Of course, on Monday, we saw a 0.54% decline. On Tuesday, the banking index was down 0.35%. On Wednesday, 0.3%. But on Thursday, though, that the banking index was up 2.09%, but returned back to the red on Friday, closing at down 1.69%. So all this contributed to the banking sector down 0.21% at the end of the week. For the consumer goods sector, it was down 6.47%. And looking at the activities from Monday through Friday, on Monday, that sector was down 4.75%. On Tuesday, it was down 1.29%. On Wednesday, it was also down 0.39%. But on Thursday, of course, just like the banking sector, it was up 0.09% and then returned to negative on Friday at 0.30%. For the industrial goods sector, now that was the only sector that we saw that was positive at the end of the week, though. Looking at the numbers from Monday to Friday, on Monday it was positive 0.76%, returned to negative territory on Tuesday 0.76%, on Wednesday 0.08%, on Thursday 0.79% up, and then ending the week at 0.78% down. For the insurance index also, it was down 2.16%, and the oil and gas sector was down 0.69% week on week. Of course, analysts are expecting the bearish trend to persist this week, but we'll wait and see how all that plays out. Now, to the NASD unlisted securities markets. Now, throughout last week, there wasn't much of activity. The index was down 0.03%. At 697.67. The market's capitalization came in at 501.59 billion naira. Of course, we saw a volume of 797,063, valued at 162.57 million in 13 deals executed on Friday. And at the fixed income markets now, the markets was bullish. Yields were down 6.6 basis points to 10.1%. Of course, we saw buying interest across the mid to long end of the curve. The Debt Management Office is expected to hold a primary market auction on the 19th, and they would be offering 140 billion naira to investors. But at the end of Friday, we saw 32 deals coming worth 19.09 billion naira. And at the Treasury bill segment, there wasn't a lot of activity as yields were unattractive. Of course, the market was bullish. Yields were down 6 basis points to 3.8%, and that was due to buoyant system liquidity. In all, we saw just 5 deals valued at 180 million naira. And at the almost segment, of course, the market was also bullish, with yields declining 28 basis points to 13.3%. Of course, there was much of activity there, which resulted in the deals of 159, and it was valued at 127.65 billion naira. Of course, a couple of news also made headlines in the markets last week, and one of such was the central bank's introduction of longer-term contracts on the naira, and that was in a bid to attract more foreign inflows, shore up its dwindling dollar reserves, and stave off a currency devaluation. But apart from that, on Friday, the Nigerian Breweries published its fourth quarter 2019 and 2019 full-year results at the close of markets. Kono also did report its earnings, and that was on Thursday last week. Well, let's look at all this, getting the perspective of an investment analyst at AfriInvest Securities on some of these market developments. We'll be speaking to Biodun Kerikwe, who is the market head investment research at AfriInvest Securities Limited. Many thanks for joining us on the program. Now, let's begin this conversation with you telling us, as an investment analyst, what came to your mind when you heard of the announcement that the central bank had offered Naira futures contracts for 5-year settlement for the first time. And of course, that's priced at 379 Naira 81 kobo to the US dollar.
Yeah, thank you for having me this morning. So at the FX futures market, there are currently about 13 monthly active contracts on the FMQ OTC platform. What the CBN has done is to sort of create or include additional 47 new monthly contracts, which takes the total FX futures contract to 60 monthly contracts. I mean, thereby sort of elongate the market for up to a 5-year period. This feature is only accessible by foreign portfolio investors, for foreign direct investment purposes, and also for foreign currency loan transaction. I think this is highly commendable, and I think it is interesting as it sort of provides a window for investors to hedge over the long term. It will also help stabilize the FX market and sort of attract dollars to shore up the FX reserves, which in recent months has sort of been dwindling. Now, in terms of pricing, yeah, the longest month, which is priced at about 379 naira to the dollar, is somewhat at a discount to what you find on the 1-year FX forward contract, which is priced at roughly 400 naira to the dollar. I mean, this sort of throws up a question, as to why would a 5-year be trading at or priced at 379, and a 1-year forward is trading or priced at $400 to the naira. I mean, 400 naira to the dollar. Do note that the CBN is primarily responsible for setting these prices, and they are the only counterparty. In addition, these are really non-deliverable contracts which are naira settled. You get. Now, one thing is that as to why this 5-year FS futures is probably trading lower than a 1-year forward, I think to answer that is that the CBN is clearly sort of avoiding to send mixed or wrong signals, to the market. I mean, should a price closer to a 500 level was set, for instance, for the longest monthly FX futures contract, the market will sort of take that as a bit of a signal for a devaluation, or it just may sort of spook and unsettle the market. But the whole essence of this contract, of this whole platform, is to provide stability for the FX market. And on a final note, though, there are costs and an initial margin requirement for whoever is willing to purchase any of these contracts. I mean, there is the 1% FMDQ transaction charge, and then there is the margin requirement, which could range from about 5% up to or above 20%, depending on the volume and the duration which a buyer is willing to purchase. So all in all, I sort of think this is good for the market. I sort of think this is good for investors, particularly the foreign guys who are looking at bringing in money, and but it is naira settled. So even when you do your transactions, what the CBN gets to do at the end of the day is at maturity, they're just likely going to settle you the differential between the price which you purchase the contract and what the spot price is in the market.
All right, if I'll come in here, Mr. Kerikpe, some analysts have argued that this looks good, but that is on paper. They say that given the volatility of currencies, creating contracts of up to 5 years is not the way to go in light of various macroeconomic uncertainty. Do you agree with that?
I mean, there are arguments for both sides. And like I said in my initial opening, is that what is the CBN trying to really achieve? They're trying to achieve stability, which is one of their core functions, ensure price stability in the market, both in terms of inflation and foreign exchange. That's their core mandate. So, I mean, whatever it is that they deem fit they need to do to achieve that objective, I think this is one of such that would help them achieve that objective. We could keep arguing that, I mean, mathematically, we could use some formulas and would arrive at a price that close to the 500 naira level. So it doesn't then seem to make a lot of sense as to why a 5-year monthly contract should be trading at around 379 naira to the dollar, when even mathematically you're getting a price close to 500 naira to the dollar. So there are arguments for both sides, but at the end of the day, I think we should keep our eyes on the objective or on the big picture, which is ensuring price stability. Like I said, if the CBN has set prices close to that level where we all think a 5-year should be, then they are clearly directly sort of sending signal that, yeah, we should be expecting the devaluation sometime. And I don't think it's one way or the other, it is the CBN's job or responsibility to signal that.
I quite agree with you there, but there have been concerns around the balance sheet of the central bank being stretched in recent times. Do you think this extension of futures contract could worsen that concern?
So yeah, the balance sheet has been stretched in recent time. I mean, even if you look at the decline in the FX reserve, it clearly shows that I mean, they are taking a bit of a pressure from that angle also. The fact is that what this does is it gives them an opportunity to see on a long-term basis the source of demand and the sort of the pressure point for the FX or for the dollar, and puts them in a position to manage or in a position where they could beforehand manage this pressure. So I think this is positive for them. They've had it for 13 months. They've never defaulted. They've always met up with all of the demand as to when buyers make purchases, you know. So I don't see them defaulting or not being able to meet up with a call when the time arises. So I think it gives them an opportunity to see the market from a long-term perspective and also prepare themselves ahead of any pressure.
Now, the federal government gave a hint of its intention to issue $3.3 billion Eurobond to fund the budget 2020. From an investment point of view, what is your take on this, considering concerns around debt sustainability of Africa's rising indebtedness to foreign investors?
Yes, it is no lie, or it is no longer news that currently Nigeria as an economy and the federal government is challenged. All of our debt ratio indicators are looking very stretched. If you look at debt to revenues or debt to GDP numbers, they look sort of stretched. Some are way above or very close to what the Fiscal Responsibility Act recommends, you know. So this sort of throws up concerns as to why should the government be taking on more debt. But, you know, looking at, again, what we're seeing globally in terms of crude prices, in terms of interest rate environment, central bank approach to managing their balance sheet and managing interest rates across the world, it's somewhat has tended towards lower interest rate environment. And on the back of this, the federal government is sort of open to take new external loans to leverage or benefit from that low interest rate environment that you find globally to sort of finance the budget deficit. And I think one way or the other, the budget deficit must be financed. The source of the financing also is critical. So, which is where, given the mix between local and foreign debts, I mean, in the total debt portfolio of the country, I mean, they're tilting towards foreign debts, which is good for us as an economy because we are not so weighty in terms of foreign debt. However, the concern is that in the period where crude prices, which is critical to government revenue, is not looking very good, the outlook is also not looking very positive. How then do we tend to meet up with these obligations when the time arises? All in all, the budget deficit must be funded. The local market also presents them an opportunity to leverage on to fund this deficit. We've seen yields or interest rates in the local market contract to below single digits levels, which is good. So I think, yeah.
All right, Biodu, that would be a good point to leave the conversation. Many thanks for speaking with us on the program. Biodu Kerikpe is the head investment research at AfriInvest Securities Limited. Many thanks for your time. Well, that would be a good point to take a moment on the program, right, Chime?
Absolutely. And when we come back, we will look at the discussions at the just concluded 2020 budget seminar by the Securities and Exchange Commission. To stay with us.